Hey VV Nation, all of YouTube out there. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully everybody's doing well. So last week we started a mobile series talking about how to get started with the VectorVest Stock Advisory app. So this week we're going to continue on and go over 4 tips to know when you should sell a position. So if you're ready to learn, as always, make sure to smash that like button, subscribe if you're not already subscribed, and let's jump right into it here today. All right, welcome back everybody. So last week we finished off with how to customize a graph to fit your specific needs. And that's going to lead us right into our 4 tips of knowing when to sell. So before we jump into it, a graph is basically a big picture of the stock. And as the old saying goes, a picture is worth 1,000 words. And now there's a few ways of knowing when to sell just by looking at a basic graph like we have here. So before we jump into it, let's go over what we see. So as always, I show the price shown in candlesticks. I have a 40-day simple moving average, which is that light blue line around price. And then at the bottom of it is that relative timing or RT indicator. And once again, it's cast on a scale of 0 to 2, and it looks at the short-term price trend of a stock. So above 1 means the stock is trending upward, below 1 means the stock is trending downward. Now, if you missed out on the very first part or last week's session, click on the link down in the description below, and that way you can get caught up to speed with where we're at right now. So the first tip that we're going to be covering here today is looking at price volatility. Now, volatility is when you start to see a stock that's been steadily trending up or been steadily trending down, and you notice it starting to have bigger swings both up and down. That is an increase in volatility, and that is usually a sign of a reversal or a trend change starting to form. So right now we're looking at a 1-year graph of Tesla, and Tesla is a perfect example. So as we can see, Tesla had a really nice run all the way up to above that $1,200 mark. And after that, it started having bigger swings up and down. Well, really leading up to that $1,200 mark. You see that gap up here back around the middle of October, ran up to that $1,200 mark, and then saw a big shot to the downside, big swing back up, big swing back down, back and forth and back and forth. And the best way to imagine this is like the Bulls and the Bears doing a tug of war, basically seeing who's going to win out, them both battling it out, going back and forth, and you see that in price action with these bigger swings. Well, after a big run in a stock or after a big sell-off in a stock is when you typically see these happen, and that can be an early sign that the stock's trend or investor mindset out there about this stock is starting to change. So this is always something you should be looking out for when looking at the graph of your own stocks. And as we can see, we saw that big swing coming through here, big drops higher and lower, and then all of a sudden it continued to move lower, coming off of its lows, but now potentially heading back towards that previous low there. So definitely something you want to be aware of and something you want to pay attention to in your own graphs. Now, if you're brand new to investing or brand new to looking at charts, don't worry, it does take a little bit of time to get that vision down or to be able to identify those points clearly. But the more you practice it, just like with anything else, the better you'll get at it and the faster it'll become. So that's tip number 1. Always look for volatility in the market or volatility in your specific holdings. The second tip is using a moving average. Now, the 40-day simple moving average is a great place to start. Typically, most places out there start with a 50-day moving average, and we here at VectorVest feel the 40-day moving average is just going to be a little bit quicker to get you in a little faster, also to get you out a little bit quicker than the average person out there that doesn't use VectorVest. So 40-day simple moving average is a great place to start, but as always, as we showed before, you can customize it to fit each individual holding to make sure that you get the best visual for each stock. All right. So looking at this one, looking at the 40-day moving average, just going to give a basic example of how you could use a simple moving average or any type of moving average. When the price crossed above the 40-day moving average back here, price was trading at around $6.30 a share. Well, from that point forward, it never really crossed below that 40-day moving average and ran all the way up to a high of, once again, above 1,200, closer to that 1,300 range. So you've over doubled your money right there, essentially. And then when it crossed back down, even when it crossed down that day, you closed out at around $1,000 a share. So you've made a $400 profit on a $600 stock. Not a bad day's work, and allowed you to stay in the position as long as you can to try to maximize your reward. But as always, you do have an exit strategy to make sure you lock your profit in. So that's the power of utilizing moving averages to help identify when is a good time to start potentially exiting your position or locking some of your profit in. Now, the third indication of knowing when to sell is looking at RT. RT, once again, is that short-term price trend. It's cast on a scale of 0 to 2. Above 1 shows the short-term trend is up. Below 1, short-term trend is down. So whenever a stock has an RT that crosses below 1, that is a sign that the stock is now losing you money or starting to trend lower. And if you haven't gotten out already, that is a good time to start protecting your profits. So we see for Tesla, for example, we dip below on that RT scale, below 1, right around the middle of December. Yes, it ran up, gave you a short-term potential opportunity for a quick gain. But then when it crossed back below 1 here, it got you out right around $1,000 a share. Now it's trading at $850. So saved you about $150 a share and avoiding that headache and worry at night. So that way you don't have to, worry what's going to happen tomorrow, or, oh man, I had a great gain and I'm watching it all go away. How could I have locked my profit in earlier? Well, RT can do that. And a pro tip for anybody new using the stock advisory app: once you own a stock, the RT becomes the most important indicator you should focus on. Because at that point, it doesn't matter about the fundamentals because you actually hold the stock. At this point, it all depends on whether or not the stock is making you money or not making you money, and the RT can tell us exactly that. And so, just to quickly recap: 1, looking for price volatility. 2, looking for the stock to cross below a moving average of your preference. 3, looking at RT, and if it crosses below 1, that could be a great indication of knowing when to take your profits. And then finally, the fourth, and we'll get out of here and jump into the watch list that we're using here today, and that is looking at the rating. Now, every single day, VectorVest gives a buy, hold, and sell rating on every single stock. And by the time it hits that sell rating, that is our final signal to tell you you either need to get out now or hold at your own risk. This is the final warning VectorVest will give. And if you're using the 3 other tips that we've already covered, most likely those will get you out before you ever have a stock that hits that sell rating. But let's say you're out traveling or going on vacation and you come back and all of a sudden you check your portfolio and you see a stock has a sell. That's basically an alarm telling you, hey, you need to focus on this stock and see whether the reasons you purchased this stock are still true today. And if they are, maybe you may consider holding it. But if they aren't, that tells you need to close that position out, free up that cash so you can invest it into a stock that'll make you money. So those are going to be the 4 tips. Simple, easy, and really effective at cutting down the time it takes to manage your portfolio, so that way you can enjoy things in life that you'd rather be doing rather than being glued to a computer all day long. So if you've made it this far in the video, let me know down in the comments below which tip is your personal favorite, or if you're already utilizing some of these tips, which one has saved you the most headache. So until next time, take care, adios, and toodles.